Hey everyone, welcome back to Chipstock Investor. Today we're going to be talking about Astera Labs. This company had an IPO about 6 months ago, and we're going to run it through our process and do some analysis. There's a few things that we're going to be covering today. The first is we're just going to run this company, Astera Labs, or ticker symbol ALAB, through the Chipstock Investor research process. What does the company do? And is it part of the Nvidia Blackwell story? We'll also discuss the market for the products from Astera Labs, competition, their competitive strengths, and risks for the company. We'll finish off with valuation, scenario to fair value, and whether or not we will be buying and our approach to buying if we decide to do so. Stay tuned till the end.
So as we start every segment on a semiconductor business, we'll start with our semiconductor industry flow. Astera Labs is a fabless chip designer. That means they do the engineering work, and then they hire a third-party contractor to handle the actual manufacturing of the chip. That is TSMC, or Taiwan Semi Manufacturing. They've actually been working with TSMC since the get-go when Astera Labs was founded back in 2017. From there, after the chips are actually manufactured, TSMC will send those chips on to a company like Nvidia that perhaps designs Astera Labs chip products into their systems, like, for example, the Nvidia Blackwell system that will, sounds like, begin rolling out off of the manufacturing line and into customer data centers later this year. So Astera Labs chips popping up all over the place at hyperscalers, customers like Microsoft Azure, Google Cloud, Amazon AWS, and others.
Astera falls under the connectivity and networking chip designers. Some big competitors, Broadcom and Marvell. They also have some smaller competitors, Rhombus and Credo. Those are all publicly traded in the United States. And then there's a couple of other companies, Montage Technology and Parade, not traded in the US. Astera Labs has definitely had some significant success over the recent quarters. And primarily that's because of this market segment of AI infrastructure. It's in a new market and it's in max growth mode.
So as all of these accelerated computing systems from Nvidia and from AMD get deployed into data centers, the hyperscalers need a way to connect all of those servers together. And they do that via things like Ethernet cable, CXL, and other types of connectivity products. There's a lot of cable routing data signals throughout these data centers. So we have a couple of slides here that we've talked about before from Broadcom, probably the biggest primary competitor to Astera Labs. Tens of thousands of these AI clusters, these GPUs getting deployed into data centers. And you need ways to connect those together, multiple ways. So not only do the chips themselves need to communicate with each other, but also the servers and the different racks within the data center all need hooked up. The data needs to be timed so that it's arriving at the proper time when traveling in between these different parts. And one of the ways that you do this is via a chip type called a retimer. So this is a picture of what Broadcom's retimer product looks like. Broadcom often sells these as part of a whole networking module. And we'll get into this a little bit more later, but this is Astera's primary competition. Companies like Broadcom, like Marvell, Credo, and so on, have a retimer product that they embed into a larger networking system. Astera doesn't have that breadth and depth yet to its portfolio. So when they're competing to get into these big data center systems, what they're really competing on is the superiority of their retimer product and hoping to get installed by the hyperscaler or by a company like Nvidia and AMD that maybe selects Astera's retimer product over someone like Broadcom or Marvell.
We teased at the beginning as to whether Astera Labs' success will be tied to the Nvidia Blackwell system. We have this image from Nvidia with a data center full of GPUs, and that is important to Astera Labs.
Yeah, as we'll discuss, it seems that at this particular point, Astera is more or less an Nvidia part supplier. And so its growth is most definitely tied at the hip to the success of these Blackwell systems. But Casey, perhaps we should talk a little bit about what Astera Labs does and how it has structured its business model.
Astera Labs sells the chips, and then they also have software that's bundled along with it. Let's talk about what those products are.
So these are part of a networking system. So Astera's products go hand in hand with GPUs and other accelerator products like Google's TPUs, and also custom ASICs from Broadcom and Marvell. So as well as being competitors, sometimes Astera Labs just kind of gets to ride sidecar with some of its competitors' products as well. And they are deeply embedded. Again, here you can see from the 10K with larger suppliers like Nvidia, AMD, and Intel that might select an Astera Labs chip to go with their larger chipset or accelerator system.
Maybe you're wondering what the market for this is. You can see that they estimate the total addressable market is around $17.2 billion, and that total addressable market will grow to 27.4 by 2027. Of course, Astera Labs is not able to provide all of the market share for that, but they continue to expand their portfolio with new products.
All right. So in some recent videos, we've ruffled some feathers by saying there is no moat in software. Now, we know we have a lot of new subscribers. So let us also continue to say here something that we also tell our chipstock investor community fairly often. There's also no inherent moat in just designing and selling hardware either. So how does a company like Astera Labs combat this problem? They actually have a couple of models already that they can emulate, right?
This is what a true moat looks like. This is a slide from Broadcom. If you haven't caught our most recent video on Broadcom, we actually discussed this a little bit more in depth, but they have both semiconductor solutions and infrastructure software, a 60-40 mix. Also, Nvidia provides not only the hardware that we love to talk about, but also the software stack to go along with it.
And so right out the gate, when Astera Labs was founded, one of those co-founders, CEO Jitendra Mohan, came over from Texas Instruments, where he was a general manager of their high-speed interconnect and clocking division. They started designing these chips with the Cosmos software. This Cosmos software helps their customers operate the network. It acts as a diagnostics, observability, and general just infrastructure software piece of the infrastructure puzzle. So already right out the gate, emulating the business model of companies like Broadcom and Nvidia. However, that does not mean Astera Labs has a moat. It simply means that maybe at some point in the future, they might be able to develop a defensible moat. At this point, though, it's all about max growth. And Astera Labs is definitely providing that with its products.
This product is the bread and butter for Astera Labs, the Aries PCI Express CXL Smart Retimer. We'll get more into what a retimer is here in just a second. Let's take a look at some of their other products.
The second product that is currently ramping up is called the Taurus. It's a smart cable module. This is actually also a retimer. The difference is they sell this module, this chipset, to a company like maybe Amphenol or TE Connectivity, the companies that make the actual electrical or Ethernet cable themselves. And then they embed the Taurus directly into the paddle of the cable, where the cable gets plugged into the hardware. So think of this as just a different form factor of basically the same retimer product.
And then finally, they have memory controllers. Covered memory controllers in a few videos, especially with a company that we like, Silicon Motion.
So these retimer products are designed to solve for multiple bottlenecks that are cropping up in the modern data center. They're designed to help speed up the delivery of data from one part of the network to the other. And so what does it actually do? It grabs a degraded data signal, recovers the data and the timing or the clock that's embedded in that data signal, cleans it up, and then sends a fresh copy of it onwards to the other part of the network. So at this point, again, as Casey said, it's the actual Aries, the retimer chip itself, that is making up the vast majority of Astera Labs revenue at this point.
A good illustration for this is in a relay race when a runner has to pass a baton to the next runner. You can think of that baton as the data that is being transferred. It needs to happen perfectly in time.
And this becomes an issue when the cable gets really long. That's when data degradation can come into play, especially when these cables get to be several meters or longer. When the signal comes in, there's all sorts of interference that makes it really messy. And so that retimer grabs that signal, cleans it up, and then passes it on to the next segment along the path on its way to its destination, either for computing, or maybe it's going into memory, or maybe it's moving to a different part of the data center entirely. It doesn't matter. These retimers are popping up all over the place. And the more GPUs that get crammed into these data centers, the more cable there is, and the longer the distances those cables are getting as well. So Astera finding all sorts of places to sell retimers. And again, it's implied pretty heavily in the company's earnings calls, as well as some other industry events, that Blackwell's ramp up is what's driving Astera's sales right at the moment.
This illustration from Astera shows the GPU board. This is something similar to what we see in illustrations from Nvidia's Blackwell system, multiple GPUs stitched together. And on the right, you can see those retimers, the Aries retimers from Astera. All of those GPUs, once placed on the board and placed in a server, all of those servers need to be connected together as well. Those cables can be up to 7 meters long. And because they're so long, that's why you need the modules placed on there, those retimers, to keep the data flowing smoothly and on time. So that's the products for Astera Labs. Now let's move on to the financials. This is taken from the Q2 2024 fiscal year. We're going to ignore that revenue year over year increase of 619%. That looks like an awesome number, but we don't need to discuss it. What we'll focus on is the sequential growth. In the most recent quarter, nearly $77 million in revenue, up 18% sequentially. Operating loss of just around $24 million, and on an adjusted basis, operating income of $18.7 million.
So this is pretty decent news for a company that's so small. Less than 77 million in quarterly revenue, compared to competitors Marvell, Broadcom, and others that do billions of dollars of networking revenue every year. The growth is there. Obviously, that's what a lot of investors focus on. What we like seeing here is that even at this small scale, Astera running at an adjusted operating profit, and the difference between the GAAP operating loss is primarily stock-based compensation. That's to be expected. The IPO was just 6 months ago. There's always elevated stock-based compensation expense at this early stage of the game. Generally, that's why we ignore IPOs for the first 6 to 12 months. But these numbers are improving.
This episode is sponsored by public.com. If you want to earn a 6.9% yield for the next 4 years or more, you need to check out the bond account at public.com.
It's a new way to invest in a diversified portfolio of bonds and receive monthly interest payments. The best part? If you act now, you can potentially lock in a 6.9% yield until 2028.
In other words, you don't have to worry about the Fed's upcoming rate cuts. With a bond account at public.com, you earn a 6.9% yield even as the rates fall.
It only takes a couple of minutes to get started, but you have to act quickly if you want to take advantage of some of the highest bond yields that have existed in many years.
Discover how you can lock in a 6.9% yield until 2028. Check it out at public.com/CSI.
Let's take a look at the Q3 outlook from Astera.
You can see that they've increased their revenue range 95 to 100 million for Q3, which would imply a 27% sequential growth at the midpoint, 75% for gross margin, and operating expenses within the range of 92 to 93 million. The operating loss improves to 19.4 million at the midpoint of guidance, which means they're getting closer to break even on a GAAP basis. And then on an adjusted basis, operating income is expected to improve to 26.6 million at the midpoint. How's the balance sheet, Nick?
Pretty darn good. So as a result of the IPO back in March, almost 6 months ago now, lots of cash on balance. Over 830 million after Q2. Good news here. They're actually adding more cash to the balance sheet because they are free cash flow positive. So now, again, the difference between GAAP and adjusted operating metrics is the stock-based compensation. I think just suffice to say at this early stage of the business, that's just something that you'll have to get over if you're interested in this company. You know, the stock price has actually been coming down as a result of this, a bit frothy at IPO. The market probably recognizing that elevated stock-based compensation to a certain extent and ignoring the all-out growth to this point. So you can see on a forward-looking basis, both on free cash flow and expected GAAP earnings per share, Astera Labs getting more reasonable. And I would point out this here. In spite of the elevated stock-based compensation, the market fully expects Astera to flip to GAAP profitability over the course of the next year. So something that's worth mentioning here. We'll see if they actually get there. The message here, the stock is getting more reasonable.
Let's talk about it on an enterprise value basis. Enterprise value is market cap minus the cash on balance sheet. Why is this important for Astera Labs?
Well, we showed you the balance sheet, over 830 million in cash. That means about 15% roughly of Astera Labs market cap is just cash and short-term investments sitting on balance. So you back that out of the equation, it makes the forward-looking valuation a little bit more reasonable that way. 65 to 66x, certainly not a cheap stock. It definitely bakes in this expectation that the company will continue growing at a rapid pace for a few years, but they have all that cash. That's like a full gas tank that the company can use to continue maybe sustaining that growth for years to come.
Let's talk about one possible scenario that could get us to fair value at the current share price of $38. In this scenario, let's say a compound annual growth rate of around 45% for the next 3 years. That's with a revenue of over $1 billion in 2027. Then an EBIT, or earnings before interest and tax, margin expansion of around 40% in 2027, factoring in a terminal growth rate of 6% to 7% thereafter, could get us to this $38 per share.
I think this just emphasizes the point. This is not a cheap stock, not a value, even after coming down significantly from the IPO price 6 months ago. But this isn't a completely unreasonable scenario if the Blackwell system from Nvidia really does incredible things like many analysts are expecting. I know we also have high hopes for Blackwell too. So
Yeah.
perhaps this does actually pan out as a very likely scenario for Astera through 2027. However, some things are going to need to happen for that to take place. Some things that we like. Astera is kind of a complementary company to companies like Nvidia, AMD, even to a certain extent, Broadcom and Marvell. If the hyperscalers, the data center operators say, we want Astera retimer chips in our networking architecture. So that could be a great thing for Astera, being able to ride sidecar with such an incredible partner like Nvidia as they roll out this Blackwell system. And of course, also a good thing that they're profitable on some counts and they're on their way to being profitable on all fronts.
There are some things that we don't like, however. There's not a lot of depth and breadth to the product portfolio, not just yet. As we mentioned, they have those 3 main products as well as the software. Definitely would need to see some expansion. The second factor that we're considering, we don't think AI is in a bubble per se, but time will tell just how long this plays out. Astera Labs could be hit very hard by the downturn that will come either way. Valuation is also a consideration. It's not a cheap stock, but with 20% sequential growth rates, we don't expect it to change anytime soon. We don't expect it to flip to a cheap stock. Right now, it's currently a momentum stock. So that brings us to our final point. Are we buying?
For us, the answer is no. This is a small cap business, and adding it to our small cap basket, we don't believe adds anything for our personal portfolio. We already have plenty of exposure to Nvidia. We already expect big things from Blackwell. And in fact, the stock is in a bit of limbo right now, waiting to see what Blackwell does to Nvidia's financials. So I think we don't need those extra fireworks, so to speak, from a Blackwell pure play, if you want to call Astera Labs that. It definitely seems like that Aries product is getting a massive boost from that ramp up of production. So we personally don't need it, but that doesn't mean other investors don't, right?
Yeah, this may be a good addition to your portfolio, especially if you are betting on this NVIDIA Blackwell system explosion over the next couple of years. It may be a good dollar cost average candidate to add to your small basket, or possibly just a nibble here or there and see how it goes.
I think our standard advice kind of holds on this one. It's a small cap stock. It's unproven. There's some really good things to like about Astera Labs, but let them prove their worth over time. I don't know that YOLOing into this is going to turn you into like a millionaire overnight or anything like that.
Curb your enthusiasm.
Exactly.
All right, everyone. Thanks for watching this episode and analysis on Astera Labs. We have much more coming your way. Make sure you sub to the channel. Make sure you check out our sponsor link below in the description for public.com/chipstockinvestor. We'll see you all again very soon.